Well, hello, everybody. How is everybody doing out there in Twitter land and in YouTube land and wherever? Happy TGIM, right? Happy Monday. I do want to remind everyone today's video does not contain any financial advice. Consult a professional advisor for all your financial advising needs. All right, let's get this show started. Market bounced largely last time I saw, which was good. The gold and silver didn't bounce enough. Gosh darn it, silver. Silver down 3.5. I mean, it was better than earlier. Let's look at gold. See how gold finished. Oh gosh, did I not? All right, that must have GLD. Oh, let's see, GLD. Okay. I don't know. Maybe the internet's off. I wonder if the site's down or anyway. Hey, Retire, how you doing? Thanks for being here. Happy Monday. We have a star in the house today. We got Retire on Dividends from the beautiful state of New Jersey, and now we have BR in the house. The show can absolutely start now because we have BR in the house from the land of the tall pine trees out there in Georgia. How are you doing, BR? Thanks for being here. Okay, I'm just trying to stall until this screen loads. My charts aren't loading. I mean, what's going on? I want to tell me. Anyway, all right. Well, anyway, let's try something else. Let's maybe try something that's in the watch list. And we can just go look at other stuff, but it's kind of this is the main thing I wanted to check out today. Come on. Trying to stay warm. Yeah, no, I know it. I know it. So it's 60 here today. It's gonna be 70 this weekend. You know, I think spring's here for us. I think we're out of the woods, and I bet it will be for you guys after this one passes. You know, down there in Georgia now. You know, Mark up there in Georgia might have some more winter coming up there. I mean, up there in New Jersey might have some more winter coming your way. But I bet you guys are finding Georgia after this passes out, goes away. All right. Does anyone have any idea why this isn't working? What the heck? Maybe I just will shut that. Let's just leave that darn side. Maybe let's see if this one's working. Do you notice how, or when we talked about this the other day, or did I? Silver hit the 61.8, but it's so on the retracement, which is bullish, but it's kind of subjective on where you put this part. I mean, I've never really read a book on Fibonacci. I get the theory. I know I understand the theory and about the nature and stuff. I mean, but as far as the actual technique about how to actually use it for trades. But I mean, I like this one right here. Buy the dip. Everyone bought the dip. Heck, this worked before. I mean, this worked in. Check this out. On IBIT. Well, it worked on Bitcoin. I don't know on IBIT, but let's just go see. Any of you guys like stochastics? Do you guys use stochastics or not stochastics? Fibonacci's. Fibonacci. So, I mean, where do you start it though? I mean, this is pretty easy because IBIT went to there. So we'll start it when IBIT started. Okay. So in this one, it still has further to go. If you use this interpretation, you want to buy the dip on IBIT about 41,000. All right. Not financial advice. We're at the halfway retracement now on IBIT. That's kind of interesting to me. Since IBIT's been out, which has been a year. It came out last January. We're on the halfway retracement. So let's see here. Yeah, Mayor, I got hurt on that silver. I went from being up 5% to down 1% in 1 day's time frame. I mean, I'm with you on that too. What do you mean, SPY? Are you getting excited? Is that one coming out yet, or that one's already been out? I did a video on SPY. Do you guys remember that video? Yeah, I did. I had what's his name on my show, old Greg Stoner. You guys remember that? I forget he had this one and then he had TSPX. But let's just compare them against each other. But I forget which one did which thing. Same percent scale. All right, now let me switch them to line charts. Okay. They look pretty dang similar. I think I like the TSPX one more. I'm not just saying that because it's higher up. Actually, it's second place. It's actually second place. But I think I like the. I'm trying to remember the. Anyway, we can look at those later. But hell yeah, ATTR. I got some ATTR. Still not helping. I still lost 5% in a day because the market didn't crash. Only Bitcoin did. I need the darn I needed it yesterday. I need the Bitcoin hedge fund. There's going to be a fund coming out from Global X that's going to do probably Bitcoin callers or some type of hedging strategy on Bitcoin. Bitcoin tail risk, basically, or bearish Bitcoin. I guess it's kind of like winter. But anyway, I like X funds a lot. I can't wait to see that one. Okay, so now you're saying you remember that, okay, but you didn't know they could add their own ETFs into this. Oh, yeah, it did used to be a fund of funds. Okay, well, see, I'm new. See, I started. Why didn't I hear about this? Are you holding out on me? I'm just joking. This probably happened in the 3 weeks that I decided to take. I didn't really decide to take off, but it probably happened in the 3 weeks that I didn't show up to the office. All right. So I'm trying to think, what was the deal? So they have Vanguard. Okay, Vanguard and Spider. So they're 75% long the market right there. Then they have some T-Oak. I like that. I really like T-Oak. I mean, T-Oak, I mean, it's whatever. I mean, I don't know really like it. But anyway, they have some T-Oak. Yeah, I do remember this. They did have some individual companies. And then somehow they picked some individual companies in addition. You know, they don't sell premium. I don't think there's any options. Anyway, interesting. Yeah. And don't forget Chaos. This is a good one too if you're sketchy about the market. I mean, I was going to buy it and the markets made me get freaking ATTR. And I didn't want the same thing to happen to me that happened on CAIE. So I decided just to listen to markets and not worry about it, not argue with markets this time. But let's look at ATTR and Chaos and see who's right, me or Marcus. I know it's me. I know it's me. Yep, Marcus is right. Good one, Marcus. Maybe they didn't start at the same time. Well, no. I'm not used to looking at that. Let's run like this. I guess we should look at the divas. I'm just kind of freaking blocks is making me mad. Yes, good call, Mr. Marcus. What happened to blocks? Like, I mean, to Chaos. Like, Chaos used to just pretty much go straight up. I mean, like a box spread fund would. Not that it's free money, but I don't recall Chaos. Chaos probably has crypto exposures, all I can figure out, or something. I mean, or they are somehow. I mean, because this has been a terrible market for crypto. But then when crypto bounced, I mean, I don't think Chaos has crypto exposure, but I can't think of another reason for that. I need to do another review on that one. I'm sorry, I don't have the latest information on that, but or on Chaos or ATTR. I guess I have an ATTR review that I've already written. I just need to add Chaos to it. I'll make it a compare review, and I'll try to figure out why that's happening because that's anyway. Yes, and KIQQ is trading. Now that one is a competitor with that one's a competitor. That's a hedged equity one. So I'm thinking that one might compare with something like QQQH maybe, right? Yeah, that's what that one does. Yeah, practically zero volume. Or seems to be a good one too. Yeah, correct. I'll agree with you on or. Um, let's see. Let's do or versus K Gold. I just always like to have something to compare it to. Okay, well, or does everything, and K Gold is only gold. So or's more diversified and much safer. I'm not knocking or. I mean, K Gold's levered. I mean, whatever. Yeah, or is a good one. Or has been an excellent one. Oh, and it's also long short. Okay, but it's long short and gosh, all right. Let's just pull it up. It's a long short metals fund though, right? Or a long short commodities fund, right? Militia long short says equity. I just figured ores in like iron ore, but I figured it was metal based, but not at all. It's just long short equity. Okay, well that's fine. So now we have something to compare the other long short equity to. The problem with ore is it doesn't pay a yield though. I do like how that NLSI pays a yield, but I wish it was more than 5%. And I wish its chart didn't look like yield max. What's going on here? Come on. I'm just joking. I'm picking on yield max too much. Granite Shares has a chart that looks like that too, and so does Round Hill half the time. I'm just joking. Yeah, this earned. Look, it's earned 1% in 2 months. I mean, that's 6%. That's terrible. Terrible. Yes, it appears that ore is just a straight growth product. Oh, I guess I need to do a review on that one too. PayH has some issues, and it's getting volume. I got you. DJ and grab some CIA is a good one. I got a negative video coming out on that one too, though. But it's not really negative, but just I have a video that shows where your cost, where the problem is on that one. And it was from one of the guys that is the manager. It's something I hadn't thought of before. But anyway, that you guys will really like that one, and no one else is talking about it yet. I got to get some of this stuff out. I'm just, yeah. I agree with all of your sentiment. Okay, so I'm going to stop chatting with you guys and get back to work. Max, did you just compare Neos to? No, I was just saying this chart. I compare. Yes. Well, look at that. I mean, I'm just joking, but anytime I see a chart that goes straight down and to the right, I jokingly say it's like it doesn't. It's not. I'm being sarcastic, and to be honest, that's why I say Round Hill and Granite Shares. And sometimes other companies can also have that same pattern. I'm trying to think. Let me like Baggy. I bet Baggy looks like that. Yeah, not Yield Max. Not a bad company necessarily. I'm not picking on Baggy, but I'm just saying, yeah. So that's what I was trying to say. Or's secret recipe is short Yield Max. Are they really short Yield Max? Let's go look at. I'll go look. We'll go look back. I didn't look at the top. Well, I did look at the top 10 holdings, but yeah, if you could short Yield Max's price, it'd be free money, but you have to pay the dividend. So it's like anything else. I mean, you have to pick the one that's the parent asset is going to go down enough that the high yield fund won't be able to recoup the NAV loss with the yield. That's the game on, and if you just blindly shorted all Yield Max stocks, you'd be losing, right? Or I don't know if you'd have 2/3 of Yield Max stocks are positive. So if you just, if you had to pay the yield though, I'm not talking on price. I'm talking when you short a stock, you end up owing the yield. So anyway, all right, Global X covered call. Looks like they're short Global X. Looks like they're short Global X in this one. I mean, I don't doubt that they're short Yield Max also. Okay, but that's interesting. So when they short, I never really thought anyone shorted these kinds of. Yeah, but when they short this fund, they owe the yield. Now the good thing is the yield on Q yield is only is only 1% a month. So, and then they have the Global X Super Div, SDiv. All right. Yeah, terrible ticker on Baggy. Yeah, I hear you on that. Okay. Hey, Dividend Degenerate. Go, everyone, go to Dividend Degenerate's premiere on Simi. And I want to, I want to be there. I'll try to be there at 7 or 6 my time. So that's in 40 minutes. I'll try to be there, Dividend. If you want to put the link in here, put the link in here, and I'll save the link and I'll try to really be there. I'd like to help you get views, or you can help me send some views my way, because my gosh, I haven't been getting any views lately. You've been doing a lot better than me, I'm sure. Everyone's doing better than me, but that's fine though. That's fine. You have to go to work to make money, right? You can't sit on your butt and expect to make money. You have to produce something to make money in this world. Anyway, I'd be anxious to see it. Dividend Degenerate. If you're still here, put it in the link. And but otherwise, I'll try to go see it. All right. So, does somebody else have it? Why don't I watch his station? Well, anyway, let's go to the Diversified Divas. But what's his influencer name? Is it Dividend Degenerate? If he's not here anymore, yeah. I watch a lot of YouTube, but I don't really watch a lot of other high yield influencers. I used to watch all of them, but it just so. But I'll watch. I mean, obviously, I do like to watch, but occasionally I do like to watch. I'll watch Coach occasionally. I'll watch Brad, and I'll watch him occasionally. I really like that guy Dave. Just a real mellow guy. His name's Dave. Super nice, personable guy. Super smart. Has about 15,000 viewers. Does reviews. Does a great job. I'd like to be like him someday. Have 15,000 viewers and do a great job. All right, Divas. So let's check in on him. It's still, I mean, Chippy's an understudy, but whatever. Spies above even. Q's are a little bit almost above even. Now QLDY, fourth place. Fifth place is GPTY. Sixth place is K yield, which is down 10%. Man. That's K yield is my biggest long holding because I've been selling off ULTY in bits and pieces the past couple of months. K yield is now the longest long holding. But anyway, then after that we have WPay down 17%. These are the morons. This is the moron class. Look at these morons. What are these guys doing down here? Come on, WPay. What are you doing? Alti. God dang it, Alti. What are you doing? LFGY actually held up a lot better today, considering on a one-day basis than some of the other ones did. But my gosh. And then, gosh. All right. The only reason I don't give these guys quite as much trouble is I give the morons WPay, Alti, and LFGY, because these guys can go up really fast. I mean, they'll start. If the market goes up for 3 days, they'll be back ahead of the morons. So I mean, but my gosh, it's ugly. It is ugly. See, the last time the market started going up, LFGY blocks past the special needs kids. Let's just call them or whatever. But these guys just come on. I mean, I could even excuse LFGY because it's based on crypto. Crypto's down 30%, LFGY's down 20%. But Alti and WPay, because Alti changed its formula back here somewhere. So, they aren't really based on crypto as much anymore. And went into some gold and silver, and they've done some similar stuff to K yield, but they still can't get out of their own way. And WPay's no better, really. I mean, mathematically. Anyway, all right. Well, let's go over here to historical, or let's go to rolling total return, let's go to daily percent change. I'm going to try to zoom in and just kind of see if we can discern anything from this other than that blocks is down 6 and Alt-I was down 4.2. And the next worst after that was LFGY, only down 1.5. 1.5 isn't bad considering blocks was down 6, and you guys are both based on the same type of assets. Now, the difference is, because like I always say, and people don't understand, YieldMax actually does a good job protecting the downside. The reason why a lot of people don't like them is because of in my opinion, is because of the lack of upside. But actually on the downside, the YieldMax funds are actually usually in a sell-off. They're better than the other funds for whatever that's worth. And we can see that in LFGY today. It's just because of the YieldMax. The yield's a buffer. So anyway, WPay doesn't even sell options, but whatever, who cares? They did better than, they did really well today. Okay, so let me go here. Let's just go to historical. I just want to see how they all did today. Okay, Alt Y was down 3/4 of a point. All right, blocks down 6.1. Alt I down 4.21. All right, K yield flat. I almost don't believe that. Whenever I see a number that's even like that, I almost wonder if there's an error somewhere, but I'm not going to check. Yeah, because there's no that way they went from down 6 to 0. There's an error somewhere there. Or no, that's the daily change. Okay, so the daily change could be flat. Maybe it was. Yeah. Let's just punch it in real quick. I thought that was daily change was flat. Wow. Okay. All right. So there it is. Okay. Now, yeah, K yield flat, but they were down 10.4 yesterday, 10.4 today. They didn't pick up any ground. W pay down 3/4 of a point, about the same as ULTY. And they're hanging it as far as total return goes over the past 3 months. ULTY, LFGY, and W pay are pretty much peas in a pod. I mean, so anyway, that kind of makes sense. W pay's total return is down 17. Alt Y's total return is down 18. I mean, and then you have LFGY down 20. Now LFGY was down 1.5. Like I say, that's somewhat of a victory, and I guess you can see that ULTY has decryptified because they're down about the same. They're down about half as much as the crypto-based ones. They're down. So anyway, GPTY down 0.5%. Chippy up 1.3. SPY up 0.5. Q's up 0.69. Now, where was QLDY in that? I didn't see QLD. QLDY was down 2. Or no. QLDY was actually up 63 basis points, and the Qs were up 69. Now, it's important to remember in lightning spreads, trying to think. Well, they're supposed to outperform in bull markets, but it has to go past the upper strike. So in a big like a 2% move, QLDY should be like 2.2, and the market might be 2.0. I mean, or 2.1 versus in an up move, QLDY should, in a big one. Now this one was only 69 basis points, but anyway, all right. That's good. So let's go over here. Let's check out the old index buffer. The old index buffer. Well, shoot. Man, that chart right there. Did anyone see Mike Coe's show today, Open Interest? He was saying, this is true, last Thursday, he showed folks how to do, when silver was up here on his show, or whenever it was, but it was before the market dropped, he showed folks how to do a collar. And the reason you want to do a collar when something's parabolic like that is because call options were about twice or way more, there was skew. There's way more skew in calls than puts. So he showed folks how to do a trade where you could sell a 20% out of the money in K or in SILV, not K-SILV, in SLV, and then buy it 10% out of the money put for free protection basically, but you have a 20% cap now. Well, that was middle last week, so I was watching today, and of course that would have been a pretty nice thing. And he told everyone to cover and roll down. I don't know if anyone took that, but man, that would have been, if you next time we see something go parabolic. I mean, anytime something's going parabolic up, it usually has massive call skew. Like Palantir, probably when it's going up, had massive call skew. So if you're in that and you have a huge profit and don't know what to do, oftentimes the idea is you can put on a collar at a real favorable price because of the skew. All right, so Mayor's saying, what do you guys think about XLCR? The chart looks strange. I can't figure it out. Well, let's go look at it. All right, let's see. XCLR, yeah, I got you. see. I figured. Oh, it's a collar strategy. Okay, this is the opposite of what I was talking about. Do you guys know what it means when it says collar 95 110? It means that your cap is 10% above the market, 110, and you're, at least when they initially put, or that's what they're aiming for, and your collar's at 95, so 5% under the current price, and it's yeah, global X, and there's actually an S&P index that measures different kinds of collars. But anyway, Global X made a product that does the same trade. So now, yeah, so the chart does look kind of weird, Mayor, and that's because it looks, well, let me check here. Well, that looks pretty much, well, 2020. This looks pretty much like I would expect. It went down in 2022, bottomed, had a massive run. April was ugly. That's about a 20% pullback. It looks like it's, I don't know. It looks fine to me. When you have to put dividends on that, because let's see, same percent scale, or yeah, same percent scale. Let me just hit this. Yes, okay, so yeah, I mean, it just, so here's the deal with it. I mean, had you owned just the SPY, April comes along, you were up 44%, and then you were only up 17%. But from this time period, I mean, from this day, you were up 44 and you dropped up 17. Okay. Had you bought the collar strategy, you were up 30 and went to only up 14. You lost about half your money, 44 to 15. This way you lost 2/3 of your money, because of the collar, because the one in the blue has a free put, but it's not free because it's paid for with that 10% out of the money call. The 10% out of the money call is ended up costing this person that bought. I mean, if you had just bought the SPY, you'd be plus 65%, whereas you're only plus 40%. Now, granted, you were able to sleep at night. We could see a time here in the August, or is that August? No, August pullback was 24, right? And it didn't get hurt too bad in there. When was this pullback? I guess this was, I don't remember the summer of 23 pullback, but anyway, I guess it's before I had my channel. It went from up 5 to down 4 if you had the index, but if you'd had this, I mean, it just cushions the downside a little bit. So we can start them at different points. Depending on when you start, it has a different, then it's starting from this point, you went from, like if we just did year to date last year in April, you went from up 30 to up 6 if you were unhedged. You lost all your profits. You lost 80% of your profits. If you were hedged, you went from up 25 to up 9. So, I mean, so it has a huge yield. Oh, a year-end dividend payout. Okay, XLCR. So that's good to know. Yeah. Oh, it looks like it has 4. It looks like it pays 4 times a year. July. Oh, it pays twice a year. It's been paying twice a year. Yeah, and it paid. That's why you can't. That's why I was saying, of course, the chart looks funny, because the chart was missing that $3.42. That's why you have to put on, to do technical analysis. If you're trying to do trending analysis, you want to see which way things are trending. If you're at an all-time low, have to include dividends because it's part of the investment. But yeah, I will agree. If you take off dividends, if you take off dividends, I don't know if I just took them off on this one and not both of them. Well, yeah, that's what I did. Because SPY, it doesn't matter if you take off dividends. It matters a little bit. It costs it 2 or 3% a year. So you have 2 or 3% a year, compounded less return, whatever. But it doesn't hurt it near as bad as if you don't. You just can't, you can't look at you can't do technical analysis on a fund that pays, especially a fund that pays a one-time year-end dividend of $3.42. I mean, but anyway, all you got to do to correct it is just put it here, and then it's good. Still underperforming, but all right. Seems like okay, but it seems consistent. It was 33 to 28, 25. Some again. Oh yeah, don't forget like and subscribe. I appreciate that. We got Jameson here. Now, Jameson, you may be a new one here. I just think ITWO has a cool ticker. Because at first I was like, what's that based on? TWO, and I was looking for, no, it's two. It's the Russell 2000. I just thought that was a cool ticker. No, I think that let's take a look. I wouldn't say same difference, but it is based on the same underlying, so it's going to probably be pretty dang similar. Like I always say, the underlying makes up 90% of the performance of any of these funds, or 80% or whatever. The last 5, 10, 15, 20% depends on what they're doing with the options, but no option strategy is going to fix what's happening to Bitcoin. And there's no covered call fund in the world that can make money off Bitcoin this past, what is it? October, November, December, January. We're going on a 4-month, during this Bitcoin bear market. It doesn't make, but then also if you have something that's in a raging bull market, there's almost nothing that can go wrong with something on gold. That makes up 80% of the performance. Last 10 or 20%, sure, that where they put the calls or whatever, that's what makes some funds better than others. But all right, so let's do this. So and IWMI. Okay, so going back to since inception, is this, no, that's SPY, I'm sorry. IWMI. Okay, well, that's pretty close. And then let's just, for comparison purposes, let's throw old Russell in the mix too. Let's just put IWM here so we can see how just the parent is doing. And of course, it's going to be ahead. I mean, we know it's good. That's not even a deal. We know it's going to be ahead. So depending on where you start, but using the whole chart, it is, yes, Russell itself is up 26%. However, these funds are pretty good, including dividends. The funds are catching all the upside. I mean, including dividends. You have to include the dividends. I mean, but they're matching the performance. And if you don't include the dividends, just on price, they're even. Their price is flat. Now it hasn't. I mean, you were down 22% or whatever on NAV at one point. But your price is basically flat. But because you've got all these huge dividends, I mean, I'd say between those, anytime you have a chance to get a NEOS fund, I mean, it's not like they always have, the right answer or whatever, but I just, on the pro shares, I just don't know that much about. And, I don't know. I'd say go with NEOS. I would say go with NEOS. Not financial wise, but it doesn't recover its NAV from those. Okay, yeah. No, I hear you on that. So they paid that payout is $3.42. Okay, they paid it to you a month ago. Of course, it hasn't recovered its NAV. I mean, and it's such a giant. The reason it makes it hard to recover the NAV when you pay out a whole year at once. Even though it's the same difference as paying out a week at a time, paying out a week at a time gives the appearance. It makes the erosion problem look worse. When you pay out once a year, that's just a blatant illustration, just in your face. That that's what it is. But when you pay out, weekly is different. But yeah, it hasn't recovered yet. I'll give you that. All right, so let's do this. Let me go to a different one here. That's just okay. So that's what got this whole thing started. We were talking about this. Oh gosh. I wanted to show. Let's just do this. That is kind of weird to just pay once a year, though. I mean, on this thing. Yeah, that's. You throw that in the trash. Okay, so now let's just use. Oh yeah, XLCR, and let's. Okay, you're right, and they didn't recover it last year either because it was too. I mean, it was $5.36. So, I mean, now having said that, it's the same thing as. Well, didn't we just look at? Oh, I guess it was the same chart. The price is flat over the past 4 years. But I mean, but yeah, that's without dividends or anything. So that's without factoring in your dividends. And of course, that's why you can't look at that because you'd be like, this is a terrible investment. It's flat, but actually it's not. It's actually been a pretty good investment. Up 40%. It's a big difference between being flat and up 40%. So, but yeah, you're right. It hasn't. It's not recovering those dividends, or it hasn't yet. Does SMCI beat tomorrow? Boy, I don't know, Coach. Why don't you tell me, Coach? You're an option bro. Coach probably has on some type of you. If you let me tell you this, here's my answer, Coach. If you have if you have sold puts on SMCI, or if you've done something that'll mess it up, then whatever the market will do, whatever it needs to do to mess up your trade. That's all I'm trying to say. So yeah, if you're hoping on a beat and you I don't know. I mean, the market, at least that's the way it works with me. The market always finds a way to mess up my position. It can look at the whole market and it comes and gets me. I don't really know, Coach. Maybe somebody in here has a guest on that. As James would say, your income portfolio is almost all NEOS, looking for some variety. Yeah. Well, ProShares is another. I mean, okay. So you got NEOS, you got JP Morgan, you got ProShares. Those are the ones that are on any one of those the big families don't make the riskier, traditionally haven't made the riskier fund. I mean, traditionally they do the pretty plain Jane funds. And I think it's because their customer base is wealthier. You give, I mean, Global X, or JP Morgan, people are happy. JPI paying 8 or 9% and getting tons of NAV and being a great 3-star or 4-star rated. That makes, when you have, that makes that's plenty for millionaires, multimillionaires. And that's what their customer base is. So these, a lot of these other companies, to be honest, they're going for more of a retail base. Something like a Granite Shares, a Yomax, or even a Curve is courting more of a retail business. And as such, they're putting out funds that they're trying to one up each other. So Round Hill comes out with one that tries to one up Yomax, and then Granite Shares tries to one up but all of those companies are on the risky side. You have a risk basket, you put them on one side, and you put JP Morgan, ProShares, and NEOS on the other. And it's not that NEOS is a big company. I was trying to decide between big companies and little companies. NEOS is big now because their funds are popular, but they aren't an old money Wall Street company necessarily. But I'm saying the old money Wall Street companies with BlackRock, JP Morgan, and Goldman Sachs. One of them has ProShares, one of them has iShares, but I get mixed up. ProShares, iShares, and JP Morgan. Those are no one for stability. But if you're trying to retire and you have 700,000, that the JEPI is not going to get you there, right? So but if you have 700,000, you probably don't have a JP Morgan account. You probably have a Charles Schwab account or something. So anyway, BTGD did some thing at the year end too, paid a div, but its growth, it's due to the Rick rolls. Yeah. You're right. They have to pay out if they retain the income. Yeah, I think they can retain the income, but then they have to recognize it as corporate tax. Well, corporate tax is even after the cut, it's higher than letting people decide what to do with it and having the tax rate pass through to the customer. And that's the whole idea of the RIC rules. Yeah, and you know these fund managers, whenever you tell them, hey, just make a fund that pays me out of profits. Some of them will tell you they can't because of the RIC rule, or they'll try to explain why it's not practical or whatever. Tell you the truth, I don't know if I really believe them or understand that. I have some ideas I'm working on that for content. Now we got Charles in the house. We got Charles and Coach in the house, and Mayor, and DGen, and Bond, and Skeptic, and BR. We got a smart crew here today. All right, so we got 36 people, which is awesome. But I don't want to go over into that other. I want to go watch that other interview. What time's it going to be? Yeah, 5:47. We'll let you guys go. Let's go watch that other interview. It's at 6, right? I mean, we talked for a few more minutes, but let's get out of here. I'm going to go take Jax for a quick, trip down the street, and then I want to come back and watch that on Simi. Man, I can't believe I didn't even know what Simi was the other day. I mean, gosh darn it. I mean, I knew what it was, but I've forgotten. Soxy's making it. Oh, remember when we looked at it? That's right. I looked at it and it didn't look worth a darn. Everything you put up against it, or whatever. I still want to see. Still want to see what's about though. All right, Mayor saying you think Goldman Sachs Income Fund catered everyone there. Yeah, I know, and I wasn't trying to pick on them, but I'm trying to make this connection, and it may not be true. I'm trying to make the connection that Goldman Sachs, probably their average account balance is 7 figures. The average account balance, for the retail firms is probably a lot less. I'm just trying to make the connection. I don't even know if there's a connection there. I'm trying to make the connection that these guys could put out a fund that paid 20 or 30% if they wanted to. They just put a target 20 fund. They don't because they're catering to because you guys know that the higher the yield, the more of a tax on the upside. They're catering to a wealthier base. That's the connection I'm trying to make. I don't know if that's my theory. I guess I need to try to see if that's correct. But yeah, I agree. You don't have to be rich to have a quality fund. There's a lot of people that aren't millionaires that probably love JEPI and JPQ. It's all personal choice. But I mean, lots of you guys are the ones saying that these companies are scamming people and stuff. I'm kind of trying to disagree with you. Not really they're scamming people, but yes, some of the newer companies are intentionally putting more risky products out there to try to grab some new customers, maybe even less sophisticated type customers, not guys like you, certainly not guys like Charles. Beto is $10.50, and that's too low. Heck yeah. But yeah, I'm not trying to disparage Goldman Sachs. I mean, in JP Morgan, Goldman Sachs makes some really good funds. I mean, and here's the other thing, and they have really low expense ratios also. Lots of them, do basically the same stuff that Neos does, but I think they charge a lot less expense. I'm not trying to throw shade on Neos. I love me some Neos. Let's just go to what's a good Neos one? Triple QI. That's a gun to your head fund. Somebody stuck a gun to my head. You have to put all your money in any one fund. It has to be high yield. Like I always say, it'd either be this one or the JP Morgan one. They're both really solid. I mean, now I was trying to look at the expense rate, but the expense ratio is 68 bips. They do a good job. I'm not saying they don't earn it, but then we go over here to JEPI and the expense ratio is like half that. Yeah, 35 bips. And it's the same with, and I believe GPIX is also a very low expense ratio. Yeah, 29 bips. Really, that's the lowest of all of these. Anyway, let's go watch that show. I want to start supporting the people that support me. And I've asked Dividend Degenerate before, what's his channel's name? And I can't believe I've never seen him. I mean, he's out there making content anyway. JT, HOOW is killing me. Did not realize how tied to be. Well, yeah, it's Robinhood. Yeah, I'm trying to think of a tool to prevent that from happening in the future. It's hard to get correlations, but there on Portfolio Visualizer you can get it, but it's not really an easy way to get it. But yeah, if you would have known that was 99% correlated to Bitcoin, and especially in hindsight, you may not have. Yeah, I mean, I hear you on that. I'm doing the same thing on my blocks right now. I like blocks. I like what they're doing. I like David Nicholas, but it's just the fun's killing me. Anyway, all right, guys, I'm going to get out of here. Hey, you're welcome, Mayor. Thanks so much for listening. And I could be wrong about my theory that the bigger houses go for the lower yields because their customers don't care as much. Maybe I'm wrong, or that is my theory. I can maybe do a little research and try to verify one way or another. Let me try to get this. Use that. Okay. All right. Remember, guys, not financial advice. Please consult a professional advisor for all your professional financing needs. Somebody that knows you, your family, your tax situation, all your secrets. Because I can't possibly know any of that stuff. I'm just talking about stuff that's good for me. And not to mention, my picks have been terrible lately. Do not listen to me. Please do not listen to me. They use me for research, but don't allocate like I do. All right, guys. Hey, and also don't forget, you can donate to the channel if you want at paypal.me/MaxConvexity. I appreciate you guys so much being here, especially the other influencers that were here, like Dividend Degenerate and Coach, and also Rod was here earlier. But everybody, all right, guys, I'll meet you over that Dividend Degenerate video in 5 minutes or 7 minutes. All right, I'm gonna take Jack's outside real quick. I'll see you there. Let me make sure I'm not missing anything. I've seen a report that said title. Forward that to me. I'd like to see that. I mean, I'm open to suggestions. Absolutely. Yeah, blocks is killing it. I know it. I would love to evaluate that and look at it. If there or anyone that ever has anything that you think I might be interested in. Mayor sends me stuff all the time. I appreciate it, Mayor. I don't always respond. I always look at it, and then sometimes, but I try to always thank you for it. All right, I'm gonna look at that really quick. Now that's called Sarepta or whatever, or Sarepta or something, right? I think I have looked at this one before. SPRA, all right, SPRA or Supra, yeah. SPRA. Okay, so the new one, Michael, is it maybe a new ETF? But yes, I would love to see that report. DJ, anything, I would love to see that report. Love to see that report. So, but back to what JT's saying, HOOW is killing him, and that's Roundhill. I think more what's really killing all of us is just me. I'm just saying it's leverage in W's case, and it's freaking Bitcoin. I mean, it's something, Anyway, we'll look at this. Oh, okay. Shares should have went up at the market. That'd be major support. We can talk about that. That we can talk about on Friday. Yeah, that we talk of markets that should be on major support. Shares should have went up with the markets. Oh, okay. All right. Well, SPRA, I guess. SPRE. Sometimes I like to look at the other ones that are out there and discover new funds. You just type in S&P and then you see. But I want to do some looking into SPA. I need to look back into that. We were talking about that. I need to not forget that. I need to not let that one slip through because that's a cool fun. We can get Greg back on the show if you want. If you guys want to talk about SPA and other stuff. All right, it's a healthcare REIT. Yeah, the SPY REIT, or yeah, SPRE, of course, right? Yeah, of course. And the one you gave me is a healthcare REIT, also SPRA. Avon Wealth LLC bought a new position in Sabra Healthcare. Okay, that's probably what it is. Well, that's good to know, Michael. That is good to know. Since you guys are still here, seriously, does no one know what the name of his channel is? Is it really Dividend Degenerate? I mean, how have I not seen this? It's not Spencer. Did you guys hear Tom Lee's warning? It's not good. You should invest in twice if it's SPY. Oh, there it is. Dividend degen. Okay. Okay. No nav erosion. I like this already. Hey. All right. Hell yeah. I'm not even subscribed to this dude. How could this be? Is this, I mean, this is him, right? Look, he edits his videos and stuff. All right. I hate him. I hate him now. I hate people that actually put production value into their darn videos. God, he's trying to show me up. Look at this. Gosh darn it. I'm just joking. All right. Anyway, so let me see if I can share the link to his latest video, and then you guys will have the link. I like to help out other supporters just the same way other supporters help me out. When I was getting started, I don't know how to find the link. Anyway, we'll go find it. Oh, it's the same company. Okay, that makes sense. That makes sense, Michael. SPRE and SPRA. Yeah, I can, of course. It just threw me because okay, yeah, there you go. You want to talk about a stable stock. I mean, outside of April, it was about a, 1 month drop, but then within a month, it was right back to where it dropped from and just going straight sideways again. Yeah, it pays 4%. Okay. All REIT, capped index. Oh, it's Sharia. It's a Sharia one. And I've heard about these before. In fact, I swear I knew I'd heard this. I have come across this somewhere because so it is somehow, it is trying to use companies that somehow have something to do with the Sharia law infrastructure or something. I did. Yeah, I told it, let's go look at this. Maybe because it's a global REIT, but I mean, yeah, REITs or Sharia. Maybe Sharia doesn't mean Sharia. Maybe I'm getting that messed up. Maybe I'm not talking about, but no, it's Sharia compliant. So does that mean like is that a religion? Or does that mean is that Sharia, like the law that you guys, I mean, yeah, but I actually did look into this because I remember the Sharia thing. Anyway, it's been doing great. It's been doing great. Yeah, I know he missed it. That what I'm looking at. Well, I thought it was SPRE. Isn't that what you want me to look at? Global REIT. I thought that's what you told me to look at. Yeah, Sharia. Okay, and it's spelled that way. Okay, I wasn't sure if the spelling was correct. Now that you spelled it, I mean, I wasn't sure if I was the right word. Now, if that's the way to spell it, Mayor's smart. He knows how to spell it. Okay, yeah, I think that's what it is. It trades under SPRA. Okay. I thought you were okay. I'm sorry. Okay, well, this is Sabra Healthcare. Okay, sure. So this one's paid a 6.5% yield. That's nice. Looks like it pays quarterly dividends. 30 cents a quarter. Huh. Not a bad looking little fund there, right? I mean, up 44% in 3 years. That's not too bad. All right. Well, I got off track on the SPRE. I'm sorry about that. But anyway, there's Sabra. There's Sabra Health. This one has nothing to do with Sharia, but that last one did. I mean, anyway, whatever. I just never heard of it. I didn't know they made Sharia ETFs. They make it, but the thing is, pretty much, we're in an ETF bubble. They make ETFs for everything. We're in an everything bubble. All right, guys, I'm gonna get out here and go watch Dividend Degenerate. He starts right now. Let's go see. Well, I was gonna say let's go see if he's on yet, but I don't have his address. I don't know where he's gonna be at. Maybe I could go right here. Maybe this isn't him. Or maybe he just doesn't make videos all that often. I wish. Anyway, there's probably more than one Dividend Degenerate. All right, guys, I am going to get out of here, and I'm going to go watch this video. All right, I'll talk to you later. Peace.